talk about those earnings itself. Kalpataru Projects that clocked in a weakish first quarter performance, as we had seen in the sector itself, marred by higher heat waves and disruptions due to elections, etc. We have Amit Uplenchwar, who's the director of Kalpataru Projects International, joining in to discuss the numbers in details. Thanks a lot, Amit, for joining in. The first quarter, you did see profits decline by 19%. Revenue grew just about 8%, as against your own expectations for the full year, upwards of 20%. Now that we're in the middle of the second quarter, I wanted to know if you've seen any recovery in the pace of execution. If you could give us a sense of whether you will continue to maintain your 20% growth guidance for the full year.
So first of all, 100% we are confident that we will maintain our guidance of growth for the entire year. You made my job easier. Yes, the first quarter was exceptional with extreme heat waves and severe crisis of labor at most of our project sites. And that was because of a very long 5-phase election. And as you know, most of them are only starting to come back now. And already we can see the pace of activity picking up. So I'm not overtly worried about a little drop. That was because of less revenue than we had thought. And one of our sectors, which is water, which is primarily government, had a revenue shortfall, which was a one-time event. But I think we'll pick that up in Q3, Q4. So we're pretty confident at the end of the year, we should maintain the growth guidance of 20% for the full year.
Got it. All right. Hi, Amit. Good morning and good to see you in. This is Nigel on this side. So revenue growth, you're saying no worries on that front. What about margins? Earlier you had guided from 8 to around 8.5%. Do you think you should be working with that number for the year? And also, if you could give us, what is the order inflow target that you have for the current fiscal?
Yeah. So Nigel, we had always guided that we will do a PBT of between 4.5% to 5%. And if you look at a standalone basis, we are at 4.4% with our PBT for the first quarter. And as I mentioned, we had some of our divisions like water, which are heavily government dependent, couldn't do the revenue as they had anticipated earlier. And I think as in Q3, Q4 that picks up, we are very confident that our overall guidance for the full year of PBT on a standalone basis of 4.5% to 5% will be maintained at the end. So far as EBITDA is concerned, it's practical for us to, we've been always saying that you should track our PBT percentages, whilst EBITDA will be in the range of 8.5% to 9%. We look at our PBT guidance for the full year at 4.5%, 5%, and we are pretty sure we'll maintain that.
And you're going to give us the order inflow as well. I think your order book is at around 57,000 crores, I think. And there is an L1 position of around 50,000 crores. You could give us the updated numbers and what's the inflow target for the year?
So we have an L1, Nigel, this little correction of around 5,000 crores.
5,000 crores, apologies.
We are talking about an overall yearly guidance now that we have clarity post elections of close to 22 to 23,000 crores for the full year.
Right.
We've done well in the first quarter, and as of date, our inflow of orders is close to 7,000 crores already, and with some L1s, like you mentioned, of 5,000 crores. So we are confident we should be able to do 22 to 23,000 crores at the end of the fiscal.
Are you under-promising here? Because, the first quarter itself, you've done 7,000 crores, and this was marked by a lot of disruptions, like you pointed out earlier as well. You are L1 in 5,000 crores. Together itself, that makes about 12,000 crores. Last year, you did close to 30,000 crores in terms of inflows. So 22 to 23,000 crores as against what you did last year and a couple of years ago as well. One would assume that you are under-promising out here. Could you give us a sense of how this 22, 23,000 crore order wins would be spread across all your segments and what's realistic here?
So if you look at 22, 23,000 crores construct, last year was an exceptional year because we had, as you are aware, from 1st April last year, we transitioned to a merged entity. And it's moving our profile to more EPC projects in nature as against in our yesteryears, wherein the first, 20% of the project duration generally is the engineering phase. And we still continue to grow with 20% year on year in terms of our top line growth. And I think what we are focused being Kalpataru is not just top line, but also bottom line, resource augmentation, management and delivery capability. and ensuring we always deliver our PBT percentages as promised. So I think 23,000 looks like a fair number, given that we have already a very strong order book in position. We are ensuring that, next year and this year, we continue to increase on our margin profile even further. And we believe that this should be a fair number for us to work with, because at the end, what is most important is not just winning orders, but delivering them also to all parameters.
Correct. All right. Very well put, Amit. What about the net working capital days? That's moved up, I think, by around 20 days or so, at around 120 days plus. Tell us, where does this number settle down at? And also the debt numbers, you're very comfortable with there?
So our net working capital, of course, for, after a long time is at a number of 122 days, as you mentioned. We will, at the end of the year, get our working capital days back to below 100, where we've always been. This first quarter, like we said, our revenue could have been more, given the fact that we had elections and there was a slowdown in general. But I think as our order execution picks up steam, Q3, Q4, we should be able to come less than 100 days of net working capital at the end of the financial year. So far as debt is concerned, yes. Again, we had some of our inflows from clients which are primarily in government because of capital allocation being delayed. And we are already seeing that change in July and progressively in August and Q3, Q4. So I think that debt number, which went up this Q1, should come down to our regular levels, where our interest cost as a percentage of revenue should be at around 2% at the end of the year.
Right, that makes sense. Final question then. Promoters pared their stake by about 5% in the last month. What's the plan here? Are they looking to pare some more? Because as I see, 33% of the promoters' stake is pledged as well. So what's the plan on depledging that?
So I think if you look at our current YTD pledge numbers for promoters have already come down below 30%. And I think they are just short of 29%, which is one of the lowest that it has been for a very, very long period of time. There was also some of the debt that was repaid as a part of the overall pledge reduction. So going forward from what we are given to understand, I do not see any more pairing of debt happening, at least in the pairing of percentage shareholding happening in the near term. And so far as pledge is concerned, as you can see from 31st March 24 levels, it has already come down below 30%. And I think that is the only trend that will continue going forward. I don't see, at least in the immediate term, any pledge percentages going up from where they stand currently today.
Hey, all right, Amit, thanks a lot for joining in. It was a bit of a soft quarter, but as you mentioned, a whole host of one-offs, elections, heat wave, and labor shortage as well, but sounding extremely confident about the remainder of this year. Could explain why the stock is only down 1.5% or thereabouts. Well, time to get you some